Alright, so far we have found out that there is something special about this law that we had on the 4 hours time frame. Remember, tubadde tunoonya what is so special about this law, oba we are searching for reasons for us to be able to buy from this law. Era nga kwezo reasons so far we have found out that this law has a strong law. Okay, it has a bullish QM, and you can observe it from this structure that I have cut out. From this structure, the previous low got taken out, and then the previous high also got taken out. Something also looking like this. Jetuyita bullish QM yafe. So before we can be able to buy from this low, we need to see liquidity. And in this case, the type of liquidity that I always talk about, we need to see price giving us a pullback and then later on continuing. So when price decides to come back to this low, we can use this low as our liquidity, the last 3 candlestick pattern. This is the type of liquidity that I always talk about, to rounding off all of these lows, because when price decides to come back, price will have to take out these lows. Remember, chinayogirako about trading ranges, so price just continues until it gives us a bearish QM. Then when price gives us this bearish QM, we can expect some sort of pullback to continue with sales, and sales will be coming like this. Sales will continue until price reaches this low, then we shall get our buys, something like this. But I'm most interested into getting these buys to continue. Naira, it is possible to take these sales, though I don't want to go through that this time. So tuji identify in the bullish QM yaffe nti eri available in that low, because when I zoom in you can see the 3 candlestick patterns zenabadde njogerako zengoberera when I'm marking my structure. This was a 3 candlestick pattern here. The red candle is long. On its left we have a short candle, also on the right a short candle. Then also here we have a blue candle. It is very long, but when you look to its right, this is short. When you look to its left also, this is short. So this is a 3 candlestick pattern, this one also, then also this one. So that is how we came up with this structure. Remember, these red candles indicate sales. So we got a drop, a pullback, another drop, okay, then price short to the upside, something like that, giving us our bullish QM. Sweep of the previous low, then previous high getting broken. Bullish QM is the same as a strong low, so we knew that. Olwalabye ekyo nategeerawo nti price cannot take out that low because it is a strong low, so I can go further and look out for my points of interest. So if this is my strong low, I can see all of these lows that got formed later on as price was going to the upside. Twafunye push up, pull back, price neyongerayo bwetyo nekola bino byonna. So njagala wetegeze what happened. Price continued, then another pull back, another push up, then a drop. See, the same structure, bearish QM. Price swept the previous high somewhere here. Price swept the previous high, and then price broke structure to the downside, bearish QM. I think mulabe ekintu kino engeri gye kijjamu ng'era we nakibalaze wano, that price will continue and then price will give us a bearish QM. When you see that bearish QM, you just know that price is coming back, retracing ekomeo mweno strong low gye twalese wano, so that we can be able to buy and continue further. So price gives us this bearish QM. You can take these sales no kulukutanaza until price comes back to this strong low so that you can buy. So this is what was happening here. We can see we got the bearish QM there. Okay. Price yo always ejja kukulaga ekigenda mu maaso. It's up to you to interpret that structure very well if you want to take part of every trade. So just by understanding that my liquidity is also present, also here a trend line fits there, all of that is liquidity. All of that is liquidity. Last 3 candlestick pattern, and also there's a trend line that can fit there. Okay, a trend line that can fit there. So imagine how many people wanted to trade at that region. That is all of liquidity. All of that is liquidity. So this low can give me some good buys. For the take profit one, I was targeting this high as usual, that one. Then also on the left there was another old high that I was targeting, which is this one. Okay, that's why one mbadde now line yange I'm targeting that old high. Kanzileyo mu time frame yafe 1 hour gye tuli okukoleramu. So in this case, if I'm having my liquidity, the next part for me is to select my entry point. My entry point, it can be an order block, it can be an imbalanced filled price action, or a point where an imbalance gets filled up from. So those of you guys who are familiar with smart money concepts and ICT, mumanyi kye njogerako. So you look for that point where an imbalance gets filled up from, and you choose that point. Immediately as that point gets filled up, you can take your entry and you will be very safe. Though, as usual, kucha stop loss, I recommend you to put it below the strong low. Okay, so you can see here clearly we had an order block, the last selling candle before the buy move up. That's a huge zone that we are having. You can also decide to check the lower time frames. So when you check the lower time frames, a the order block, if you say point where the imbalance gets filled up from, something like this, and you could minimize your stop loss up to somewhere here. It's up to you. It's also valid. So long as direction wise over the mutufu, this is a very good trade for you to take. Okay, for me my entry was here, somewhere here at this zone, because one to add on a imbalance when you take a close look here. So we had our liquidity here, all of that liquidity. Then we had this point which had an imbalance or a fair value gap. So that fair value gap, this point where it could get filled up from, that is where you had to put your entry. Okay, place your entry there, place your stop loss just below the strong low for the safest stop loss placement. Then you target your targets, and you can see price goes there. Ngawo chagala ka top down on point, you know where the market is heading next, and you're good to go. So since this is EURAUD, let's check for the stop loss. It was very small actually. These were 23 pips. In a stop loss ya pips aviri musatu. You're aiming for 124 pips. Pips chikumi aviri munya. So that's enough for an intraday trader. That one trade, this is a 1 to 5 risk to reward. Okay, osobola okulaba video nga bwe repeating, nga osobola okulaba ng'ojjamu proper understanding of it. Nyinza okubeebwa mu mbadde ndi mu crashinga, but ekikulu nti tukigusizza.